Hey people, good day at office. I I managed to be pretty much in break even during the day. Despite that I started the day with a couple of loss. I make a good straight of traded the seven trades with gain. I make it the day positive. Um, but I think that I should make some mistakes during the day. In this basically because I was operating using cell phone. This is really bad, so I don't recommend to anybody because you don't have all the reference clear using cell phone. But then, this review is about the best trade that I saw in the day, context and setup, and what is the management that we should do based on Albrook's methodology and my knowledge about it. Before I start, please give me your like if you like this kind of videos, and I'll try to make more if I have time for it. But thank you very much for your support, and if you like, even if you want to share this channel with somebody else that is a beginner trader or trying to learn price actions at Brooks, so feel free to do it. Thank you. I'll start the review of our day. Speaking about yesterday, I think that that's important that we can talk about this breakout. It was a breakout in a low probability event. When it happens, I have the theory. I need to perhaps to review Al Brooks videos to see if he has something like that. But this is a kind of exhaustion or climax leg, or spike, in three pushes up. But the most important thing that this is the low probability event. So what I'm saying, we're always saying, even when we talk in Portuguese with Brazilian people, is when we have a low probability event, we have the chance to test the start of the low probability event the next day or so, or even the same day. So that's what's really happening here. I didn't see it this morning, but that was really happening here. You see here, this is the start of the low probability event, and then it was tested today, um, at the beginning of the session, right? So the regular 10-hour sessions. So when we saw Globex, it's pretty much a breakout and then a spike and channel in three legs down. So we see clearly here. Um, I get two trades at the beginning of the day. It's what I'm using right now, Globex. So for me, 8:30 my time. I try to took this one, try to get this FPO of this low, um, and then there were a wedge close a wedge, so I put in my stop wide in order um, to let the wedge get down, but I get out something like this below this 153. So in fact I had to put 10 points of stop. I think that it was go there, and then it picked me here below this 155 during one of those bars. So unfortunately I was not able to get out. Should have get out right here in this 171, right after um, this bar, when it's breaking out this trending line. So I should get out here in 150, 171, but I didn't. So I took my stop 6 points or so. But then we have a bigger wedge here, in the channel, more I see more form channel. See here, it's more parallel one. So we have this one. And look at the how's the regular 10-hour make a BOP here in this channel, in this trending line. Okay, but I got this one another wedge. Even we have one leg, two, two, three. So we have a couple of wedges here. This one and this minor. So I get long above this 100 was kind of was the open of the day. Yeah, I think so. This 187, and then we got these 3 bars, and I just get out. I didn't want these bars with those gaps. This one gap down here, I didn't like that, so I just get out with 5 points loss. And then we started the day with this bar one. Some of the people could take this bar one. It's not a bar, it's a good bar, I think. But perhaps you need, with that huge gap here, you see, you need more price actions. Wait a little bit more to get, to get long. But I was looking for this testing here. Eventually, I was writing down to the people that for 70-60 was a good, something like this here was a good point to get long, but I didn't realize that we have this low probability event. So this was the best place here. So it was very low with the breakout. This is a breakout point, right? So on this way. So if we consider that, for example, we have 3 consecutive bear bars closing below the half of the bar, with the exception of the 4, but making breakout of the previous bar. So good sequence of bars, right? So but this is leg 1, pull back leg 2, and then we have bar 5, right? So closing pretty much in the high of the bar 4 with a great tail above. So we have here some bears trying to get the price down, right? So but then it was immediately reversing the bar 6. After bar 6, you need to think when we have 5 and 6, we need to think bar 4 close, and then the time if it goes to the bar 4 close again, it will be sellers trying to get out there. So that's basically what's happening in the 8, and then this 8 reverse this L2, failing that L2, and that makes the price accelerate. It makes a good, very good breakout of this opening pattern, and then in a micro channel, very good micro channel, testing the EMA. So here you have, for example, 12 and 13 is a L1 setup. I should mark it here. It's after micro channel, good micro channel. You can buy here above that H1, and you can buy even the close of that bear bar, this close. You can buy that one. Stop here. You can buy those 2 bars. What's happening here is that this inside bar, is a L2. So L2 trigger with follow through. This is really bad signal, right? So but we still are above the 50%, but we're in the moving average, so it's really hard. We can pass hard time. If we have a L2 in the moving average, it's kind of set up for selling. Despite that we have three good consecutive bull bars, at this time it was kind of trading range, price action, and then we had here you know rejection on the EMA. We can say that it's normal to have a rejection and wait some bars, but I get out of my trade here in the bar 18 because I didn't like it. I didn't like four consecutive bars, even if they're overlapping. There is no gaps. I didn't like it. And then if you don't like it and you get that 19, you get long again with 19. I wait a little bit more because we have in the left we have some bull bars, or perhaps we could have some bulls disappointed with this leg. So I expect a little bit more. And then we have that 21 inside bar that I took it, and then I tried to get the second leg, but for matter of timing, I get out in 29 with 10.5 points, and that will be my best trade for the day. That 21 is the best trade of the day. I was not able to take everything of the potential that they have, but you see here that is in the 41 we reach leg 1, leg 2. That's the target here. You have the minimal target is the close of that opening gap. So in the 32 you have that, right? So that's the best trade. Stop in 18. You see here we had this, but you see here we have more than two times the risk when we go the target. So very nice trade, very nice structure, clear from the price action point of view. Then you have another micro channel here. Look at this: 1, 2, 3, 4, 5, 6, 7 bars. Bull bars closing near highs, breakout, leaving a micro gap. This is a really good micro channel. It's a breakout, so you can say this is leg 1 pull back, leg 2 is goes there. So you count from here. This is the breakout. First leg, second leg. You can say that this is still leg, right? So also it's a wedge, but then 27 is a H1 bull flag. You can buy above this 24 inside bar. You can buy 26. You can buy above 27. You can buy above. I don't like that doji, but we are after a strong spike, so we can even buy everything here. So 29, I didn't like it. There's a wedge here, perhaps a line here. You see that? That's why I get out, right? So 1, 2, 3. So we can have that wedge too. It's dangerous. So it's a good bar to get out. Take profits. I took it, but perhaps I will. If I had clearly the leg 1, leg 2. Perhaps I will let a little bit more bars. When I say clearly, it's because I was operating just for cell phone today. I was not able to open the platform, so it was speedy in that sense. So another micro channel here. 1, 2, 3, 4, 5, 6, 7 bars, and then first bar trying to, it says L1, so it's trends to be above. That what's happened. So 34 is a good buy. Thinking on L1 failed setup after a micro channel. Good micro channel with bars, symmetrical bars, good size, closing in their heights, very nice. Even the beer body here, it's closing above the half of the bar, so it's good. Then we have micro wedge here, a wedge 36, 41, and 43. And when we go with C43, I was I was long here above 38. It's a H2. When we see 43, I was not quicker enough to get off. I didn't see by my cell phone that was a major resistance here on the height of yesterday. If not, I would put my exit there, but it didn't. So it's this 44 gave me by surprise when at 45 came to make a pullback in the, let's say, in the break even for the bulls that are trapped above here. I did get out with some points, but it was a pity management here was chained to get this bar because it's normal to have it if you have this major resistance in 4,800, right? So it was a mistake there. Then we started to make a triangle after this trading range, so trading range price action, and we see this, right? So when we have this impulse, I inside and inside, and Albrook's always say what is the best way to trade this is I'm gonna put this in orange just to differentiate from my entries, right? So this is the, so when you have an I and you're coming from the bull trend like this is the first one, right? You put an order in stop order above the II for a continuation or resumption of the bull trend, right? Or you expect or you put it in below. But if we are in a bull trend, sometimes it's better to get a confirmation. So what I did was I get out here in 45, but I did not get short here in 46, which I'll recommend. You can get you can get short here and make a reverse order above 46, and then if it's triggered and fail, you will be it will try to break out for the opposite sides. So that what's how Albrook's recommends to how to manage this trade. But then I waited for the confirmation. 47 is a better breakout, clear breakout above 34, above 44. So it's really best trade to get this in this confirmation, at least because we're coming from a bull trend, right? So in the day, and then I get this trade, and then 49. It was a good bar, perhaps. When we see a bar like this, is the biggest bar in that leg. We should exit at this bar. It was a mistake not do it, but then when 51 tried to get resume the trend and make another legs, I did get out with some 4 points here. They mix an II again, 50, 51, same situation, right? So we are in trading range right now, and you suspect that now it's a trading range. II in trading range, it's pretty much the extremes, let's say the boundaries of the trading range. So you have an II, you can, in this case it's more clear, you can buy above. In this case, for reversal, this is a reversal pattern in a trading range, so you buy above, right? So you can get this, for example, right? I was short, so I didn't get this one. But then it goes up, and you see here sorry, here it's 44 and 45, and then what we're saying here, right? So we're in a trading range, so you cannot buy above. By the contrary, you need to wait to see if there is a confirmation of that breakup up, because this is a trading range. So it's the contrary, you buy, you sell above. I didn't sell, so that's a mistake. And then when it goes below, I exit this trade here, and then I sell, I get short below, right after, or make a reverse. I don't remember. No, it was I exit first, and then I get short. So, and that was 1, 2, 3 legs up, and then I get out above this H3, right? So that's basically what I did here. This 64, I get out above that bar. Well, then 65, I buy above, get long there. I think that was a good bar. So, but this was a surprise for me. Price was a surprise. The way that it fails makes me buy it again, and then I get out below 72, because 71 I was expecting to go over. This is again an II, and this is the same situation, but in contrary. You see here, so you can buy above that bar, right? And then you expect that to retake, because resume the trend, because we're talking about we're lower in the trend range. So I was expecting to get there to 4,800, but didn't get there. And in contrary, it fails. When it fails to break out from a side, it goes to the next side. So that's why I get out below 72, right? So that's basically the trades and patterns that I see. What we can see now for tomorrow is that this swing is really important here. So I'll mark this for tomorrow. But so we have now a new swing that we need to consider for tomorrow, and take a look when we were trading in or making our trading plan for next day. Well, thank you for your attention. Please give us your like if you like this video. Thank you very much for watching me.